Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody! Welcome to the video research from the ForexPeaceArmy.com. Today the first week of the new year. And we will discuss as usual the euro currency and start from the daily time frame. But still in the beginning of our research, I suggest you that you visit our forum and read weekly and monthly analysis as well, since those charts also have some significant nuances that are important for the trading and understanding of the current situation, but they are stand beyond the scope of the current research, since this is only the daily video research. Well, on the daily time frame, we will continue to collect the different signs, the points of the potential retracement, the medium-term perspective on the euro currency. On the first chart, we see some of them. First of all, take a look at that larger A, B, C top, D pattern that we have discussed almost during the previous month. What we see some clues that tells that probably market could start the retracement. First of all, as you know from the harmonic patterns analysis, that as more harmonic AB and CD leg, the more probability that some retracement, some strong support will appear at the point of the completion of the ABCD pattern. So our pattern is more or less harmonic, since right to that moment this legs has had the same angle. Currently you see that the CD leg is a bit more slow and flat than AB leg. That also tells that the momentum of the market becomes weaker, and that some kind of retracement could start right from that area. So around 128.30, the point of completion of that ABCD pattern. That's the first moment. The second moment, if you take a look at the MACD indicator on the daily time frame, you will see the clear potential bullish divergence, even if market will proceed to the 128.30 or even lower to the 127.50 areas, as we suggest as points when retracement could start, from which the retracement could start. Even in this development, this bullish divergence will hold, and that is the second moment. Also pay attention that that is the monthly target 129.04 from the great ABCD pattern, and that is the major monthly area of support. 618 support from the whole swing to the upside 130.39. That's particularly we are expecting of some retracement to the upside in the medium term, but first market should complete this pattern, ABCD pattern. It will be a pattern that could trigger the starting of that retracement to the upside. Okay, but currently market stands in the responsible area, some significant area, since market just hit on the previous week this target on 29.04. Now we can see that market totally stands in the monthly agreement. That is very important. And now our task is to not skip the signs of the potential starting of that retracement to the upside. Currently we already see some signs. First is the more flat leg of the ABCD and this divergence. On another daily time frame, what do we see? Almost the same picture as during the previous week. First of all, you can see that this target stands slightly below the current market, 128.48, 618 extension from that A, B, C top pattern. The current market development doesn't support the bullish trend, so you can see that price action stands above the red line. Red line is the Jordan-Apley MACD predictor indicator. When the price stands above it, the trend is bullish. So the simple MACD will show you the bullish trend, but price action doesn't support that. It shows this downward continuation move, shows the dynamic pressure, bearish dynamic pressure. This suggests that market still should shift trend to the bearish side. This is the first moment. The second moment, take a look at that swings. This could be the first drive. The second drive stands at the 1618 of the this swing to the upside. It's right here. That is the second drive. Also, that is the better flyby that leads to some 3-8 retracement of this swing to the downside. This could be the third drive, and it should accomplish at the 1618 extension of that retracement. This also could be the 1618 butterfly and the target 127.73. By completing of that butterfly, market will hit that target, and also it will hit that target 128.30 on the daily time frame. So, by completing of that butterfly, market will accomplish all major targets on the higher time frames, and this could be the trigger pattern. Also, it will complete this 3-drive buy pattern. So that's what I'm speaking about, is that this is absolutely logical to see some continuation to the upside. And that current retracement that we have discussed on Friday and Thursday, this I understand this as more like the respect of just 127 extension of that swing, some intermediate support, rather than starting point of the global retracement or medium-term retracement that we are expecting. Well, from that point of view, this also could be the trap for the traders who enter on the long side of the market too early, that do not see significant targets just below the current market. Well, if they will enter on the long side of the market right now by suggesting that this is the really start point of the retracement, so that could lead to the significant move to the upside, market will proceed a bit lower and grab the stops that had been placed just below that low. That is also significant low, but by another reason, but you will understand it only if you will read our weekly research and analysis of the weekly time frame. Below that level is also a lot of stops, and if market will trigger it, it will even could proceed a bit lower than 127.70 to the 127.50 maybe. So anyway, this is the very significant area, and probably I suspect and odds suggest that probably market will first establish the new low and reach the significant targets before we'll start any solid retracements on the daily time frame. On the 4-hour time frame, we see that current retracement is definitely the retracement. The current move is definitely the retracement, because this very choppy price action, you can see no impulse thrusting moves inside that swings. It's all mostly reminds the bearish wedge. And I prefer to see, to be honest, I prefer to see that this retracement will stop somewhere around that area and maybe proceed a bit high to the 130.25, because that will be the confidence resistance that we have discussed on Friday on the 4-hour time frame, 130.04, 130.05. Also, that's the 50% resistance of this thrusting nasty bar to the downside, and that will be the 100% extension of that A, B, C bottom pattern, 130.25. So that's some kind of agreement. And for the bears, this will be perfect and calm situation. Is a situation if market will stop retracement right here or even lower and reestablish move to the downside. Also will be perfect if that swing will be the left wing of the potential butterfly. So if you will count the distance between this low to that high and count down 1618 extension, you will see that market will hit all targets that we have discussed on the daily time frame. This could be perfect because this could become the triggering pattern on the 4-hour time frame that will let us to enter on the long side of the market and catch the pips to pips the potential start of the retracement to the upside. Also take a look that if market will proceed lower, it will also hit the 1618 extension from that pattern, A, B, C top. That is very probable since market accelerates right from the 618 to the 100% extension. That very common leads to the continuation to the 1618 after some retracement to the upside. Now that we see this retracement to the upside, pay attention that this is a pivot point for the coming week, 129.78. That area is the next area of agreement, 130.88, 130.93, and weekly pivot resistance 130.87. Well, from the bearish point of view, it will be not the problem and strategy if market even proceed to that area. Although it will be a bit extended, but still this is acceptable because this is just 618 resistance from that swing. Okay, that is the weekly pivot resistance 1, and very often when market stands in the bearish trend, it retraces to the weekly pivot resistance 1. After that point, market still has some chances to proceed lower. It will be a bit nervous and warning situation for us, if you also have the bearish view on the market. But still, this is acceptable, although, as I said, I prefer to see the finish of retracement right here. What I do not want to see is the move above that level. That's monthly pivot point for January, 139.29, and especially taking out of that high, 132.24. This will be absolutely unacceptable for the bearish development and the forming of the reversal patterns on the daily time frame. In this case, we need to wait some more clarification from the market, because this will be not quite logical from the point of view of the current behavior on the market. On the hourly time frame, what we see, as we said, this retracement should be significant. That has happened. Market has reached 618 support from that swing that we have discussed on Friday, 129.15. Now market is proceeding higher. This could lead us to the 3-drive sell pattern. You can see this bearish divergence as with MACD histogram, as with the simple MACD. If you will draw it, you will see that simple MACD also showing the divergence here. This is very common when the market is forming wedges and 3 drives pattern. It combines with the divergences on the indicators and oscillators. Well, from that perspective, from the perspective of the MACD histogram, it tells us that upward momentum of the market becomes weak. So you can see this momentum on that top and that momentum on that top. It tells that reversal is very probable, and I will not be surprised if market will just touch the weekly pivot point and break this consolidation to the downside. Still, if market will form the 3-drive sell pattern, it will proceed a bit high to the 130.25, I suppose, and only after that should turn to the downside. That is what I particularly will be watching for on Monday, the starting week. Well, into the first sign of the possible continuation to the downside will be just returning back below the weekly pivot point and taking out of that C point, 129.15. In that case, market will erase this ABCD pattern, okay, and will break down this support and turns to the continuation to the downside. After that, we should wait for proceeding to the 128, maybe even to the lower targets. Okay, that's our current view on the market, on the euro currency. So you can see that's very tricky to trade current market when it stands inside the monthly support area, and our major task now is to catch the moment of starting of the retracement on the daily time frame, to catch the necessary pattern that could lead us to enter on the long side of the market. But still, as we believe that market first will renew the lows on the daily time frame and will reach as low as 28.30